Good morning, everybody. It's Christian from Serene Education with the 4 majors and update for the 30th of July 2013. Going to be doing the 4 majors starting with the euro against US dollar using our FX8 Ultimate template. And let's have a look and see what happened yesterday. Just going to zoom in here quickly so you guys can get a better picture. Okay, so what do we have? We've had indecision the past couple of days, and yesterday we've had a slight pullback after that. So we've had spinning top, and then yesterday we had a pullback and a slight hesitation candle. It's still up. Price action is still up. You can see here on the indicator box that price sentiment is still favoring longs, which are positive. However, intraday we're seeing a bit of negativity coming through. RMO is still above the zero. MACD is above zero, however consolidative, and that's reflective on the chart. Moving averages all crossed over recently, and we are trading above the monthly fib as well as our weekly fib. And we've just tested our daily 78.6 fib retracement from the current highs that we saw recently to the low. So nice bounce, and we've seen consolidation now at the 78.6 mark. So ideally, if we are to see any further upside, we would need to see a bullish engulfing counter close higher than the 78.6 to confirm that we should be looking as our first target back up towards the prior highs that we saw here through the mid part of June of this year. So would need to see a close higher than 1329.93 or ideally the 1300 mark to see any further upside for this particular pair. So looking at intraday, let's have a look at the 4-hour time frame for this particular chart. You can see the consolidation range, price failing to really make any movement higher than that 1329.50 mark, and subsequently what's happened now, price has pulled back. A lot of indecision candles, spinning tops, dojis at this level. And what we're seeing now is a consolidation in a positive trend. So what we want to do now is, if this is to remain positive for the foreseeable future, we would need to see price actually gaining ground now. Ideally now you can see prices testing a price support and resistance level high here near term, as price is trading right now at the 1324.94 mark. So we would need to see a bullish engulfing counter close higher than the 78.6 as I mentioned on the daily, to break out of this consolidation range. So ideally on a 4 hour we want to see a nice break of the current high here at 1329.95. That would be a strong indication we should start looking for further momentum to the upside, and our next target would be the 100% retracement here, and which is roughly about 114 pips away. So be patient, wait for a break, a close above this area here on the 4 hour particularly, or daily, to give us a sentiment still looking high. Otherwise, what we're going to see, if this continues to find resistance here at the 78.6, is for price to pull back even further. If that does so, then the first thing it's going to do is head back towards that major support and resistance level low here at the 61.8, which is our daily 61.8 on the fib, but also our 38.2 on our weekly. So a lot of support here, which will constitute, will also go nicely with the institution moving average, which is sandwiched between it. So that is roughly from this current support intraday to this level here. You're looking at just short of 90 odd pips, so more than enough in the intraday to see a neat profit. Okay, so moving on to sterling. Here again, we've seen a nice bounce for sterling against US dollar. However, the actual indicator box here is quite speckled. We are seeing a lot more negativity, and the R-squared is complementing that sentiment intraday. And that sentiment is coming through generally because of the fact that price has found a clear resistance now at not only our daily level, but also our weekly fib. So we have a lot of resistance by price, and we have the institution also coming through on the downside. So current high now through the middle part of June to the current low that we saw here in the start of July. You can see a nice healthy bounce there for sterling. However, being capped near term, is trading between not only the month, it's trading above the monthly fib retracement level support here, which is a major support and resistance level that goes back to 2010, but it's now finding resistance now at the weekly fib. So ideally we want to get above that to see any further movement to the upside. Yesterday's bearish engulfing candle has confirmed that there's genuine resistance to the upside. However, if that is to be genuine resistance, then we could be looking at a target back down towards our monthly fib, which is a good 43 pips away at the 23.6 1527.40 and change mark. So going to our 4 hour time frame, you see a lot more negativity on the indicator box here. We should be looking to target this level, which is on our 4 hour, the institution moving average complements that support and resistance level, the Feb retracement here at the 23.6 on our monthly. So looking for further shorting opportunities would be short term into this level here. If you can find a reason to break below that, then we head towards our weekly fib. However, if she could consolidate here, because this is a major support and resistance level, we're trading above it now, so we should be looking for positiveness. So if she bounces here, then target back up towards the weekly highs that we saw, the resistance highs we saw just recently. US dollar Swiss franc, let me get rid of this. Okay, here you can see price falling back against Swiss franc. However, near term finding support now at the weekly fib at 23.6, which is the 92.67 mark. We have been here below here before. However, when we wanted a decisive candle, we got a lot of indecision instead. And what happened was, when we did get our decision candle, it was back in the opposite direction. We saw breakout pullback and then the continuation back to prior highs. Here we're seeing a trade into the support here, and we see it a bounce. Yesterday's bounce after an indecision candle. Is this a morning star? That remains to be seen. You can see that there's more negativity on the chart than there's positiveness. So we're still very much in a negative trade. All the moving averages above price, RMO below, MACD still below. So we are, the only thing that's stopping price from falling any further is this weekly fib here at the 23.6, which is our 92.67 mark. So going to our 4-hour time frame, would like to see this area being breached as soon as possible. Swing lows depicts downside. I can show you here, swing low, swing low, swing low, swing low. Price is trading at that level right now as we speak. So the 4-hour candle that's in play right now. We have another hour, just over an hour to go. You can see it's bearish engulfing as we speak. If we fail to see price moving higher and we see a bearish engulfing candle, what we should be looking for is to see price moving back towards that weekly support and resistance here at the 23.6, which is roughly where price is trading right now to this level, 39 pips and change. So take away your spread, you're still walking away with 30 pips. Tight, very tight, and one to really be focused on, because if you're looking to short here, then your return is going to be quite shallow, and the risk is going to be quite high. So one to watch. Rather like to see a more defined candle, ideally a break and close lower than 23.6 to definitely confirm sentiment still looking near term or long term strong to the downside. However, the longer we spend above the 23.6 here, there's more likely for price to start building on that. So here, no trade on this particular one. Far too close to the major support and resistance level. Far too much risk as it stands at the moment now to see a genuine return. US dollar Japanese yen, the last pair of the day. Here again, we have seen a fall, bearish engulfing candle, a lot of failure to really find a lot of momentum once we crossed above the 50% retracement here. And what's happened was, especially after Bernanke's announcements a couple of weeks ago, we have seen a lot of indecision against the US dollar against the yen, and subsequently we've seen the US dollar falling against yen. Near term, we've had a lot of indecision, and what's happened now is price is consolidative in our shorter terms, two splitting tops. And as the Asian session last night, we have seen a lot of reaction, and there seems to be more positiveness intraday. So what we want to see after two indecision candles, or any indecision candles, is a decisive candle. We don't want to trade on an indecision. If there are decision candles on a daily, we want to see a daily decisive candle. So I'm not going to trade this until I get a decision candle. If I do see a bullish engulfing candle here, then I would target near term back up towards the 50% retracement that we just come from. That would constitute a nice morning star after a fall, and that would tell me that I should be looking for a knee-jerk reaction back up towards this 50% line here, just at the 99.60 or 99.70 mark. Otherwise, if we get a bearish engulfing candle close, then it would probably potentially head back in towards the weekly low here at the 23.6 at just below the 97.23. So ideally, quite close to this level here, but if we do see a bearish engulfing candle, hoping for it to close below the weekly low here, or the weekly fib retracement at the 23.6, that would ideally constitute that I should be looking back towards long term, the monthly lows here, or the monthly fib at 38.2, but my first target would be the institutional moving average on the way. Between where this red line is to this institutional moving average, you're looking at 200 pips, so there's more than enough profit on there to see a valid return. So here also want to see a decision candle after 2 days of indecisiveness. I would like to see where the decision lies, where the sentiment lies. Once I do, then I'll re-look at the scenario and then plot my course. Okay guys, that was it, short and sweet, to the point. Please, if you are using this template, back it up with some money management, but most importantly, please follow the rules of the template, most importantly. And keep it simple, guys. Look at your major support and resistance levels, trend lines, and just gauge to see what price is doing relative to all that. And once you have a trade, just treated it very, very mechanically. Okay, I'm gonna leave you to it. See if there's any news out today, guys. It's gonna really factor in price action. Not a hell of a lot of here. We have a bit for the euro market, and then we have some this afternoon announcement for CAD, and then a bit for the US market. So be aware of those news announcements and see how they reflect on price action, and then wait, be patient, let the market tip its hand, and they will follow suit. Okay, so I'm gonna leave you with that. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.